Good day, everyone. Today I have with me Mr. CK Ong, Chief Operating Officer at SBI Digital Markets. And SBI Digital Markets is a subsidiary of SBI Holdings, a major Japanese financial conglomerate heavily involved in banking, asset management, and digital finance. SBI Digital Markets particularly focuses on institutional-grade digital asset solutions with a focus on areas like tokenization, digital securities, and blockchain-powered financial infrastructure. Thank you so much for taking the time to meet me, Mr. Ong.
Hi, nice to meet you. Thanks for the call.
Yeah, thank you. Before we dive into the questions about some of the amazing things you are doing at SBI Digital Markets, I want to talk a tiny bit about your own journey. So to start off, I saw on your LinkedIn you have 20 years of experience in risk governance operations and specifically in digital assets. What sparked your passion from technologies for technologies like digital assets, and how has it evolved as you've moved from traditional finance to the Web3 space?
Yeah, as you know, traditional banking, we look at process improvement, technology a lot. So what I have always been doing is to use technology to try to improve processes, streamline processes, get operational efficiencies, same as all the banks and financial institutions out there. So I remember that many years ago, when I first started working in banking, anyone with good Excel skills is a value, right? To all the teams, to the front office team, business teams, operations, finance. If you're good in Excel, and you can do a macro, you can script a macro, that you are a resource to die for. And that was what was happening at that time. Years later, just about 5 to 10 years ago, if you are good in data analytics, if you know Python, you are good with Tableau, then you will have an advantage over the rest because everyone else knows Excel, knows SQL. So if you have a bit of more data analysis background or technical skill, you will be able to solve more problems, right? Compared to just doing a BAU. And I always telling my team here in SBI, also in my previous banking job, that I think that operations will evolve slowly from using Excel to streamline processes, to make processes quicker, to doing more programming and data analysis, right? And then in future, I foresee that operations will need to redevelop their skills, reskill themselves to be smart contract designers. So, because in future, you can imagine that the world will be running on blockchain. Financial institutions, financial industry will be really heavily dependent on smart contracts. And in that case, there will be no need for human intervention in operations. Everything will be on smart contract. So how can operations staff reskill themselves? And the only way is to look at processes end to end and design the processes in the smart contract, right? And that's where the value of knowing the operational flow, knowing the operational processes comes in. So I think that as part of the traditional banking industry, I think every banker out there will be very, very forward-looking in terms of using technology. And digital asset, blockchain technology has been around, and everyone has looked at it. So I think that it is no coincidence that it's going to have a big impact into the financial industry.
Yeah, with your current role and your past experience, you have a very strong foothold in both worlds, I would say, in DeFi and TradFi. And when speaking to both believers and skeptics about this digital space, what's the most common misconceptions or pullbacks you get from people you talk to in your daily life?
So there's two. One is tokenized securities instead of digital assets purely. So one of the misconceptions, I think, is that everyone believes that there's a secret market out there, that as long as I tokenize my asset on chain, there's a secret pool of capital, there's a secret market waiting for there to invest in my asset. I think that I've been repeating this in quite a few of the sessions that I've gone through, events. There's no secret market out there. It's probably the same group of people, right? Tokenization is a technology that can give operational savings. It's a new format that can open up new corridors and a new maybe cross-border way of doing transactions. However, there's no secret market out there that will suddenly appear. No one will suddenly wake up and want to hold a tokenized bond or tokenized fund, right? So there's a lot of education needed. There's a journey and phases needed for industry, for players, for clients, for banks, asset managers to go through to reach that stage that this become a norm and become mainstream, adoption become mainstream. So that is, I think, the most common misconception. And players like us in SBI Digital Markets, we are trying to push the boundaries and push the investors in terms of education, in terms of the journey, to be able to assess these and structure these kind of products in a way that can be adopted. So I think that is the first misconception. In terms of digital asset itself, as a cryptocurrency itself, I think it's not really a misconception, but I remember just 5 years ago, 3 years ago, a lot of the traditional players, institutional players, banking industry, still feel that Bitcoin has no value behind it. And they think that it's a scam. A lot of people think that it's a token that has no value behind it. And therefore, if there's no underlying value, it shouldn't be an asset class. Just a few years later, look at now, right? Countries are reviewing whether this Bitcoin can be held as a reserve. So I think the industry has changed. I was just joking with my colleagues here that about meme coins, right? About the altcoins. And it's the same thing. A lot of people in the industry also feel that memes have no value. And I reminded them that it might not happen, but 5 years ago, all these people say the same thing about Bitcoin, and now they wanted to hold Bitcoins, right? I mean, I can't foresee what will happen to memes and the altcoins, but let's be open-minded, right? And then we should learn from the evolution of blockchain, of cryptocurrency, and keep an open mind of what possibilities there can be in cryptocurrencies.
Do you think TradFi will see any use case in meme coins as well in the future?
I think altcoins in general is an asset class not to be ignored, right? They have outperformed Bitcoins.
Yeah.
They actually are getting a larger and larger share of the crypto space. Whether all meme coins or all altcoins are going to be there, I don't think so. Same as cryptocurrencies. But there is a potential that a small group of meme coins can prove themselves to be resistant enough to give the assurance of the value and the consistency of the value as an asset class. So that is actually a project that we are doing on regarding altcoins as well, to try to assess and classify such coins to see whether these can fit in well as an asset class. So watch out for a product that we are curating in this space. But I think that there's a good potential, and as I mentioned, especially for us in this industry, we should keep an open mind. That I think that there's a good chance that a certain group of altcoins could emerge as an asset by itself.
Yeah, and I personally really believe in especially assets or altcoins that are focused on RWA and tokenization, as you mentioned as well. And part of that is also a project that you are very closely involved in, Project Guardian. To give a quick intro, SBI Digital Markets is a partner, or is one of the partners in the Monetary Authority of Singapore's Project Guardian, alongside other major players like Chainlink, UBS Asset Management, and Swift. This pilot is a global cooperation between policymakers and key industry players to enhance liquidity and efficiency of financial markets through asset tokenization, One of the goals is, for example, to create digital subscription and redemption systems for tokenized funds. Now, it all sounds super exciting. What's like in this recent collaboration? What unique contribution does SBI Digital Markets bring to Project Guardian?
So in this collaboration, SBI Digital Markets fulfill a few roles together with our partners. SBI Digital Markets, we are the distributor of the UBS tokenized money market fund. We are also the custodian of the UMIN token for our clients. And together with Chainlink, we actually created a smart contract which allows subscription and redemption on chain, and is really a digital transfer agent function that we have created. So I think that this is quite a game-changing project by allowing operational efficiencies to come through to the fund, as well as bringing not just a registry on chain, but bringing the transfer agent, one of the functions of transfer agent onto the chain. So I think this is quite groundbreaking in terms of what we are doing. And I think that from here on, this could showcase both tokenized money market fund, as well as the sky is the limit for digital transfer agent. In the traditional world, fund admin is actually having a lot of value-added processes that they do. Transfer agent is very manual out of the whole process, right? And because it's very manual, but it contributes just a percentage of the whole value chain. So in the operational view and the process management view, that is probably the low-hanging fruit to digitize and try to improve and digitize the manual processes. So I think that by removing some of the functions manually, that could bring in a lot of efficiencies to both fund admin as well as to fund managers. And with cost savings in this area, this could always translate into cost saving for investors. So I think the whole ecosystem will just benefit from such a tool, such a smart contract that Chainlink and SBI Digital Markets created last year.
How long have you been working on this whole project so far?
About 8 months.
Okay.
About 8 months of work that all of us have been working closely with.
Yeah, it goes fast. Like 8 months is actually not that long for achieved. Yeah, so much already.
Yes. So if you look at the industry, a lot of the POC that is done is take about 1 year to 1.5 years, and then after that, if they want to commercialize it, it take another 1.5 years to do the first live deal, or another 1 year. For us, we actually don't want to do POC, so we immediately start with the first live deal in a very controlled environment like Project Guardian. We do the first live deal. So while doing that, we actually skip the need for a POC, or rather wrap the POC around the process, and then we do a technical live and we do a go live. So with 8 months of work, we did that, and then that can be repeated. Even with tweaks in the features, we can repeat that in very short time, repeatedly with different players. And that's, I think, what we are trying to do. The time for a project, right? The first project will take time, and then slowly through the experience and the work that's been done, we will slowly grow faster and more efficient when we go to the next issuance and the next project using the same structure. So that is what I think SBI Digital Market is trying to streamline and try to close up that time as much as we can.
And specifically talking about Chainlink, how or in general interoperability solutions, how long do you think it will take for, in this case, CCIP to become a standard in large-scale tokenized assets ecosystems?
I think it's closely linked to how fast do we think that mainstream adoption of cross-border, cross-chain transfer of tokenized assets will happen. And in our mind is within the next 3 years. So within the next 3 years, we think that should be the adoption point of cross-border transfer of tokenized assets. And the reason for next 3 years is because players like us, we actually have projects that leads up to that. So as I mentioned, the industry will not just happen by itself. right? So we can't wait for things to happen. So we want to push forward this journey. One of the projects we are doing, which Chainlink is a core member of, is that we are trying to link all the platforms in the tokenized asset area, cross-border, across jurisdiction. We started that project last year, bilaterally with different exchanges and different platforms. And end of last year, we kicked off this initiative called Global Buy-Side Alliance. We got 8 jurisdictions together on the table to commit to do this together. And now we are working with much more than that. And that is really trying to do cross-border transfer of tokenized assets, tokenized RWAs, and provide common liquidity pool to the whole ecosystem. And one of the end game is that's where Chainlink's CCIP solution is really needed, because every country, every platform is run differently. It could be a different chain, it could be a private chain, public chain, it could be a different protocol altogether. So we are trying to bridge that, and that's where we are working very closely with Chainlink on.
Awesome. Are there any other, besides Chainlink, are there any other Web3 partners that you're currently looking to establish or already have established a partnership with for other services?
Yes. So for us, we always look at the buy side. We think that the sell side has already done a lot of the testing. A lot of banks, issuers, a lot of asset managers, they have done their own tests on the sell side. And I think that all the POCs have been done already. All the tests that needed to be proven have been proven. Now it's up to us, the buy side, to try to create that. So for us, the partners that we are working with is the buy side. The digital exchanges, the securities companies, the private banks, the fintech platforms, protocols, whoever has client base in their jurisdiction, in their area of expertise, that's the partner that we want to work together with. Of course, we want to make sure that we work with the regulated partners and the established partners to keep the integrity and the reputation of the ecosystem. So we have been working with quite a lot of partners in this area. What Chainlink is working with us is really set up the core infrastructure of this ecosystem. And on top of Chainlink, we are working with other partners. We have an institutional, we have an international legal firm together with us to help us look at legal and regulatory aspect. We have Chainlink with us. We have other partner on the custodian transfer admin. We are working with Apex Group to form that transfer agent and the admin layer with us, and a few other parties to fulfill different roles. So together with that, we want to lower the cost of barriers to entry for connection. In the traditional world, if a normal company want to connect in the tech to another company or exchange to connect, it takes anything from 500K to 1 million to do that. And it takes about 1 year to 2 years to do connection. If you want to do this across 10 players, it will take 10 million and 10 years. So what we are doing is that we think that the barrier to entry is very high, especially when players out there are still using legacy traditional system. How to bridge it over is one thing, and then how to do all the cross chain and different chains within all the players in the ecosystem is going to be challenging. So what we are trying to do is to work on a template that can lower barrier to entry for tech, for ops, for legal, and then we'll try to bridge the regulatory side together with our partners and the regulators.
Yeah, you see that a lot of big financial institutions already are talking about tokenization. Like, for example, Larry Fink, CEO of BlackRock, already has spoken out multiple times about how he sees tokenization transform the finance world. How easy is it to convince new major institutions to adopt these new technologies?
Very difficult, of course. I don't think it's just blockchain itself, right? You imagine, I mean, I was in banking for many years. To introduce a new system, right, and to replace an old system, it's a 5-10 year journey, right? To bring a project to life, and to even get the buy-in in the beginning is hard. And now to introduce a new technology, a new way of working, to revamp the whole technology, and it's not just technology. I think the whole business flows are revamped. I think that is a challenge by itself to even understand what we are looking at. So it's hard, but I think that the fact that the cryptocurrency, digital assets, and tokenized assets have gotten so much traction in so many countries, and the regulations are clearer in a lot of countries. I think that shows that this is here to stay, right? So I think the institutions are a bit more multiple-minded. The conversation is definitely easier than before. The hard part is it's not about the institutions not understanding or not accepting this, is to work with them on the journey, how to help them adopt this technology, right? So setting up processes, right? Looking at processes, looking at risk, security risk, looking at the operations impact. So to piece all this together, I think is the challenge. So it's not about the technology. I think it's more about the end-to-end to allow this technology to be used for the financial institutions. There's a lot of things need to be set up, needs to be revamped within the organization. And those policies and frameworks that need to be revamped are the ones that need time. And there's not many standardized frameworks out there yet, but a lot of frameworks have been coming out globally. So hopefully that will help to make things easier to understand and clearer what kind of framework is needed. And there's also a baseline with different jurisdictions how to assess these assets.
Yeah, I spoke with Sandra Rowe, the CEO of GBBC, not so long ago, and she talked about the struggles of convincing these companies. We believe that we are already past the turning point, and it's a question of adopt or get left behind for most of these companies that haven't, looked into this yet.
FOMO, right? Afraid that they are left behind is I think joining as part of FOMO shouldn't be the motivation of looking at this space. Because if you're joining just because you're scared of losing out, you will not be really looking at it closely, deep enough, or end-to-end enough, and try to link up to your system. You'll just be keeping pace so that you're not left out, so that you could catch up. What we need is institutions that are a bit more forward-looking, a bit more aggressive and longer-term looking, that they put in steps to be the leader. Because, as I say again, there's no the industry doesn't create itself. There's no magic button that this will happen. We need industries, players, we need institutions to take a step forward to try to push through the adoption and try to be a leader, in testing, right? Be afraid to fail, and to be able to put themselves into the business, into the technology, and to work with players like us, right? We are trying to do that so that they can also leverage on what we have done so far and leverage on our ecosystem. And what we are hoping is that through our partnerships in our very open ecosystem, we can also add value to these institutions. So I think that it's already too late for FOMO. I think that everyone should really be scared to be left behind. If they are not yet, then they are already late. So they shouldn't waste time. But those that they have been looking at blockchain and digital assets because of FOMO, I think that this is the time to step up and start doing. Because by doing it, then they will be learning, and then you can get adoption in. If not, you still have to go through the phases. Everyone needs to go through the different phases. So why don't start the phases now, when there's still some time, rather than to wait for things to happen with others before you start.
I see, especially when I scroll through Twitter, or a lot of people are very impatient. They say like it's not going fast enough. But I assume, especially in your position, that there are a lot of things happening in the background that people don't see yet or don't feel yet. As things are, like you mentioned, 8 months. You've been working on Project Guardian. That's not that's a lot of time. Like a year ago, we wouldn't even be talking about this, or let alone last bull run, or so. Yeah, what's your current feeling of the sentiment in public compared to what's actually being built in the back rooms, let's say?
I think that there's two things that's happening in the industry now, especially for these next 2 years. One is consolidation of technology players and ecosystem. Every technology player has now created a niche. Those that are here, they are created a niche. They have also identified how to position themselves, and what they need is the ecosystem to join, the business ecosystem to join. For them to get the adoption in and the usage in. So that's one piece that's doing. So there's a lot of work in that piece. So consolidation of technology players and ecosystem is one. And the other piece is the focus on business more than technology. I think that is the general sense I'm getting from the market. That it's not a technology play anymore. It's how to use this technology for the business. So a lot of the regulatory projects, a lot of the institutions are not just looking at technology anymore. So this is quite a big game changer compared to 2, 3 years ago. You are not just building a technology. You are actually thinking about how to bring in the business. So a lot of involvement have been on the business side more than the technology side, because I think technology actually is ready, right, and still evolving. But the business side is the one that is coming in now. And what I can see is that for players like us, we get a lot of partnership models formed, because to leverage on us, we have done this, let's say for these 8 months, or for Project Guardian, we've done this 8 months. If a company want to repeat this and do it by themselves, it will take another 8 months or more, right? But if they work with us, who have already done the 8 months, it will become a 4, 5 months project. So I think those players who have done that understand that. And I also, so using players who have done it before as a shortcut to learning, that's one. And secondly, using everyone sort of understand now as well as that there's no skipping of steps. You can't just suddenly adopt out of nowhere. You cannot just join an ecosystem and start, looking at digital assets. You need everyone needs a learning journey in different phases. No one can skip that journey, but by working with players like us, they can maybe shorten the time for each phases. So we also need to be a bit patient, because everyone is at different speed. So I think that now is a good checkpoint to see, and it's very clearly seen there's 3 groups of players out there. There are players who are ready for commercial, right? There are institutions who are ready for commercial. There are also institutions who are still testing, but I can see that they are very focused in what they test. So the time to test is getting shorter and shorter in the industry. Then there's a group of players who are, as I mentioned earlier, that they are not in the space yet, and just watching closely. And I think this is the group that will be left out if they don't step up and start going through the journey, because ultimately they will be too late if everyone has started adoption.
And when you talk about adoption, do you mean the technology, like tokenization, or more the speculative side, as in investing?
I'm talking about adoption as in the real business market adoption of the technology into the business itself.
Okay.
I think the investing side has been there and has been going. It's an ongoing phase on the investment side. But how to put this into the business, I think this is the time for all the players to step up.
Okay. A little different topic. As on a LinkedIn poll that you posted, you questions whether the rise of Bitcoin ETFs in last year, 2024, was a step forward for crypto recognition, but a step backward for token and wallet adoption. What's your personal take on this?
Personally, when Bitcoin ETF came up, I was very torn, because for many years, we have been, or I have been trying to educate and pitch for institutions, for businesses to own tokens, which will be representing the financial assets, or the RWA, right? So in my mind, token is the wrapper of the traditional assets, and these tokens will open doors for a lot a lot of areas that are challenging for the traditional format. But when Bitcoin ETF came about, I feel that it's a bit contrary to what we have all been talking about in the industry. We always think that the first step is to open a wallet, right, and start holding a token. It could be, instead of Bitcoin, you hold a tokenized bond, right, or tokenized fund, because underlying asset is very familiar to you instead of a Bitcoin. But now we are saying that you can access Bitcoin by putting a traditional wrapper around it. To me, I feel that is a bit contrary to what the industry is moving, is trying to push for, because if access to digital assets is easily obtained by using a traditional wrapper, then there's no reason, right? There's no push for institutions to participate in digital assets growth without needing to touch the tokens. And I think the fact that crypto is on the blockchain, it shows that the importance of holding a token, right? And that's what blockchain is about. However, the good news is that by having Bitcoin ETF, it's actually gets a lot of adoption, a lot of recognition of Bitcoin as an asset class. A lot of institutions who are not ready to take on Bitcoin itself, they could access it now, right? And they can start learning from it and enjoying the economics of it without holding the token, which I think that might be might take time for some institutions to adopt. So I think that we are in this. So I was a bit torn, and now I came to the conclusion that we are in the space, in the phase that is a mixture of both. Having a token wrapped around traditional assets or different asset classes, having a traditional wrapper to wrap around tokens, I think that naturally, as part of evolution, this might be the good space where different players can participate in digital asset world in different formats. So I think it's a step forward for the industry because more and more people are participating regardless of the format. And I hope that going forward, it will lead to more and more adoption of digital assets and of tokenized securities.
Now, specifically on Bitcoin ETFs, would you rather see Bitcoin as a store of value or digital gold, or Bitcoin as a global payment asset and a replacement for dollar, euro, yen, as Satoshi Nakamoto envisioned it back when he wrote the white paper?
So I always believe that Bitcoin is created for payments, and payments itself, right, on the chain is a very good use case to show to investors, to clients, to institutions. It really, if we can have adoption of using, be it a Bitcoin or any cryptocurrency, stablecoin, payment coin, as a payment method, that will actually give a very easy to understand use case for investors. So I think payments is always one of the values or advantages that blockchain can bring about, and it's also part and parcel of tokenized securities as well. Whether it's being used as an asset class, I think that the market has evolved differently from what was envisioned, right? 10 years ago, we wouldn't think that people would even think about Bitcoin as a asset class by itself and as a reserve, as a digital gold. But I guess it just shows that the industry has already recognized Bitcoin itself more than a payment mechanism, right? By even having the conversation that this is a digital gold itself proves that Bitcoin itself has already go above just being used for payment mechanism, right? So I think that it could coexist, right? It can still be used as a payment mechanism, crypto in general. And Bitcoin itself, I think, is showing a different use case that can coexist with this. I think it's really depends on the institutions, on the governments, whether how far they want to adopt this. I think it's just a good phase that Bitcoin is just positive for the whole industry.
A final closing thought. Looking to 2025, well, currently when we're recording this, markets aren't looking super great, but like the fundamentals have never been as good as they are right now, what's one breakthrough that you see in digital assets or tokenization that you're most excited to see, either from SBI Digital Markets or the industry as a general, and how do you plan to contribute to that?
So I think it's both one and the same thing. So because SBI Digital Markets is trying to push the industry on tokenized asset. So the one that I'm hoping mostly to see, and the one that we are spending a lot of time on and effort on, is the buy-side alliance, global buy-side alliance. We call it a GBA that we are forming, where participants in various jurisdictions will do cross-border tokenized RWA with us, and to create the common liquidity that's needed for secondary. I think that this is I think this is the most exciting that I've seen so far in the industry, and SBI Digital Market is trying to lead that. So that is, I think, one of the breakthrough that we will be able to showcase these 2 years.
Yeah. What's something? What do you see happening this year? Do you think this year will have any dramatic changes compared to the other years? Because now, lots of things have changed with ETFs being adopted last year. We have a very pro-crypto administration in America. In Europe, they have these MiCA regulations, but they're looking to do things with blockchain, although it will probably be more leaning towards the CBDC. In Asia, in Hong Kong, they're also doing super exciting things, and with Project Garden. What do you think could happen this year when it comes to these changes?
I know a lot of people are saying that this year is the turning point of RWA tokenization. To me, it is the turning point only if we in the industry make it the turning point. So I don't think that it will be a turning point if every one of us is waiting. I don't think it will happen. But with the players like us that has been in this space and is trying to push the boundaries now, and working with like-minded partners, and that's the key thing about what we are doing. We are not doing it as a close company or ecosystem. We are really having a big ecosystem with very like-minded partners to push this. So I think not SBI Digital Markets, but together with our whole ecosystem, I think that this year will see significant adoption of tokenization of RWA. And I can see that the regulatory standards that's emerging in US, in Europe, in so many countries in Asia, these are the regulatory standards are the one that is going to push a lot of clarity, and that will lead to a lot of adoption. So this year should see that a lot more, and we want to be part and parcel of it, and try to be in the midst of all this.
Awesome, thank you. Looking forward to it. Thank you for your time, CK, and look, we'll definitely follow up closely with everything that SBI is doing, and of course the things they're doing with Chainlink in particular. Thank you so much.
Yes. Watch out for us this year, and anyone who likes to join us in our ecosystem. We are happy to connect. Yeah.
Awesome.